Good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for Thursday, and we're at the 2nd of February, 2023, getting on about 6:25 p.m. Central Time. So, the one obvious thing in the market, and I close my eyes when I say it because it's so crazy, the market is so convinced that there's opportunity because they've pinpointed that the Fed, the European Central Bank, and the Bank of England are going to stop raising rates soon, and that means a pause, and a pause leads to a what? A pivot down, in their opinion. Doesn't do it necessarily that way. You could get a pause, stay there for 3 months, 4 months, 5 months, and if inflation doesn't fall enough, why would these banks pivot down? They have no choice. They'll say to themselves, and nobody's saying this that I've seen anywhere, they would say to themselves at that point, if we don't goose it a little bit more, this inflation, it's sticky, it's not coming down. And they could go up. Is it going to happen that way? Nobody knows. They don't know. I certainly don't know. But the market seems to say, no, that's not what's going to happen. We have done this, the Fed's done its job, everything's done its job, and we are going to see that inflation's going to accelerate to the downside, the job market is going to wobble, and every break we get in these markets should be bought. The reason you're down tonight in these markets is, number one, they were in most cases up pretty sharply today, and number two, the earnings afterwards weren't good. It's really that simple. Apple missed, but Apple, people love it so much, it can miss, they buy it back. It was down 5%. It came back. The last I looked, it was near unchanged. Amazon was down, Ford was down, Starbucks was down. I can go down the whole list here as to what the markets are doing. You'll hear that, it's all about currency headwinds. Apple, we couldn't get our phones out. Okay. But their other businesses are doing fine. Here's the point that you have to understand. The market doesn't care about the bear news. The market's only looking to pick up the sliver of bullishness in whatever's there and run with it at this point in time. Right or wrong, that's what it's doing. When you and I look at the S&P, you're up 2% for the week so far, and certainly coming in and challenging this area. Now remember, the 4,100 level was thought to be a resistance area for a very long time. You're at 4,169, so you're in that ballpark. When you look at this chart, I think you'd agree. You see how the market's been marching higher. And when you put the swing line study on it, higher lows, higher highs, bullish. Second thing, you had a bullish crossover take place back here. How many days ago was that? And you have this in a number of the markets, but let's take a look. That bullish crossover happened right here on this day. And that was on Tuesday. It seems so long ago. It often leads to higher high. Got to take out that high, and then I don't know where it's going. It did it right away. That's the crossover. Now you're going to hear the golden crossover, the 50 to 200 day average. You're going to hear all kinds of noise in these markets that you have to start paying attention to. I don't put all the moving averages on these charts, folks. There'd be so many lines I'd get you dizzy. That's why if you see them on TV, they'll put maybe the 50 and the 200. They're not going to put all of them. There's just too many lines to explain, except the way I do it in the morning in my subscriber videos. Boom. Because I've got a big chart, you're able to see it, I point it out. I'm not in those videos. We're looking at it right on my screen, and it's pretty easy. So where's the resistance? Well, I can tell you it's the Bollinger Band top, right here. That's where the market's fighting. That does not mean it's bearish from there. The trend is up. That is where some money's been taken off the table, and the market stays bullish until, ready? I'll give you the magic. Until the red line here closes at 70, under 79, not 79.20, under 79. Under 79, I think you're going back then down here. Until that occurs, on the breaks in the market, you're going to find that I think the pros are buyers, looking to get back to, if they can buy it deep enough, the Bollinger Band again. When we look at the Nasdaq, you kept the embedded reading. Again, you're fighting at that band. You can ride it higher. There's nothing bearish on this chart. I thought the market would have a much more difficult time, and I was very clear about this, in between the Bollinger Band and the 200-day average. And it did up until February 1st. Now, when was February 1st? Oh, I forgot. It was yesterday. And you had that day where you cleared the market, and now we're already in the Friday, and the market's pulling back into the Bollinger Band. I know it seems so far away. It wasn't. Okay, the chart action is doing as we think. I think I've given you the clue as to what the market's doing. The market is saying they're all going to blink, they're all going to drop the rates, and this is going higher. Have we seen the lows? It's hard to argue what's going to make these markets go back to these lows. That's what I wrote tonight in my report. I don't know. You need another major event, and I don't see it. So do I think that if you're a bear, that you're on your heels and in trouble? Yeah. Do I trade what I think or put out trade recommendations to my clients on what I think? No. I put out the recommendations from the chart action. And the action is bullish. It's that simple. Am I enamored with what I'm seeing? I'm not. Am I enamored with the charts? I am. Pretty simple. In the Dow, this is the weakest of the indices. It doesn't want to join the parade with the others to the upside, but it's only 30 stocks. Come on. In the Russell, it joined the parade, but it's had the embedded reading. You've had the edge day after day after day with the embedded reading. You knew that what? You've got the bullish bias all the way through until that is lost, and the market is pulled back to let the pros in. I think they've taken some money off the table. I think they took it off the table actually on the 1st. This is the 2nd, that's the 3rd. And I think they've taken some off and they're sitting there. If they get a reading under 79 on any of these indices other than the Dow, I think they're going to dive. I think they'll come out of their positions. In the VIX, let me clarify something. Maybe it's my wording, maybe I'm not explaining it. What is a put? A put is an option you buy with the idea the market's going to go lower and you can cover that at a lower price and make a profit, okay? When a market drops down to a Bollinger Band, I believe that the pros write puts, not write calls, write puts. They're saying that the guy that is going in down here is wrong and the market's going to go back to the 18-day average of closes. Does that sort of clarify everything up? If I said it wrong, I apologize. But I've been doing this a long time. I normally say put. If I screwed up, I apologize. I know what I mean. And do you understand that? The guy that's betting on a downside, when you hit that, normally the market will return to the 18-day average, and that's where that person comes out. He's not interested, it's going up there or whatever. I see this happen over and over on these charts. Can it drop even lower? It can. Nothing works all the time. But also remember, when you're writing it, it depends how close to the money you're writing it, which one you're doing. When I look at the bond market, you're up to the upper Bollinger Band. This is not where I'd want to own the market. Momentum is up, no trend. You have a lower low, a higher high, and all this bear action of raising rates has dropped interest rates. As I said yesterday and today, the press, to the letter, I didn't see anybody coming out. They agree with me. Fed Chair Powell blew it yesterday. He can't be perfect at every meeting. He started off good, but when the questions got going, he could have been the hawk, and he wasn't hawkish enough, and the market bit him because of that. Now they'll send out the other Fed members, and they'll clean it up. For sure, they'll clean it up in some manner. What about the 10-year note? Right up to the Bollinger Band. Are you embedded? No. What do I think the pros did on the first challenge of the Bollinger Band? I think they get totally out of the market. Again, the enhanced Bollinger Band course teaches that. Dollar index, first time you got to the band, I think the pros covered. You're oversold, you hit there, I think they walked away from it. Flip-flop that in the euro. You got up yesterday, you tried to get higher today, you gave that up. I mean, this isn't hard. This isn't rocket science. And if you learn to work with it, it's the combination of putting that together. You're on the side where more often than not, Okay, that's a key word. More often than not, by a lot, I believe. It'll give you that initial result. But there's a point where it won't work also. Nothing works all the time. In the British pound, I don't know. I looked at it and I thought that it was just a bearish statement. So did the market. I wouldn't be surprised if you get to the 121.58. I look for the pros to be short sellers at 123.22. They're wrong if you get over 124.14. We'll see if that does anything. In Bitcoin, understand when I'm plotting these, this is the full-size Bitcoin. So I'm used to talking about that. In my newsletter, I screwed up. I'm having my traders trade the mini Bitcoin, the 1/10 size. And I'm so used to having this here that I interposed them. I apologized to everybody yesterday. It all came about because of a trade that I had traders put on, and they made 1,000 points in the market. Now, if you're in the full size, it'll be $1,000. It's $100 in the micro minis, but the margin's $600. So you can put on a slew of them. You got to decide just what you want to put on, and you can control the risk better. That's what I think. So you look at that, and that's what I think the market did, and away you go with that. Okay, so I've made my apology, but I don't apologize for having been bullish as you got the embedded reading on it. Now we get to the Brent WTI, and I'm going to repeat. The problem here is China. India, and I read this today, is now importing more Russian oil than China is. China's numbers actually fell in the month of December. I happen to think it's COVID related. I think the factories and all these things that they lie about or they don't answer questions about or they don't report about, it could be any one of those, on the COVID situation is behind this. But I do believe COVID will get behind China. And I think that great giant is going to be growing. And I think India is growing. I think that, as you come down in energies, there's a very finite number, and people have forgotten. If it falls enough, the U.S. wants to replace its stockpiles. I think you have a market that near $70 or so could be an interesting market. You're at 82 in the Brent, but you trade lower in the WTI, you're 76. I think you're getting to that area. Okay, I think the Biden administration wouldn't surprise me that they goose up a little bit where they start buying back some of this oil. Would not surprise me. You're oversold at the lower band. This is where I think you run out of the sellers in that market. Heating oil, I'm looking for this market to get down here, and that's it. Now, cold weather is here. Tomorrow we're going to be 20 below zero in Chicago with the wind chill. I mean, we're going to be probably 10 without it. But we're going to be 46 degrees on Monday. So the swings are getting dramatic now, and that's what you look for. And when you go to natural gas, the Freeport terminal is applied again now to start loading ships. So they need 11 days to get the pipes cold. Then they got to get the trains cold enough to work with the liquid nitrified gas that converts it, and then you got to put it onto the ship. So one of these moments, we're going to get that bid come back into the market because that is 15% of our export business that hasn't been able to leave. Because prices are lower worldwide, okay, there will be a certain amount of that people should step to the table. Why? Because you want to refill your reservoirs, especially Europe. We're the natural source. I am not picking a bottom. This is a bear market. I don't know the number it's going to go down to, but lurking behind it is the export business eventually. I don't know if it starts later in February or early March, but we're in the time frame. So you put it all together, you try to come up with game plans, and I give them to you. And I do them each morning. Let me explain what I do for the traders each day because it's so important. 5:15, 5:30 a.m. Central Time, I start recording, going through 40 some odd charts. Before I do it, I tell you the reports coming out during the day, what the estimates are, what the market's looking for. Often I'll cover what's going on in Asia and Europe reports because they're already up and swinging. Then we start going through the charts. I also, the night before in my full research, you've gotten my trade recommendations for the morning. Now I get to, with the evening trade, because futures trade, most of them, almost 23 hours a day. I'm able to hone in and make adjustments with you on the videos. Here's why we're making the adjustment. Here's what I want you to do. Oh, you got filled. Oh, I'm right. Oh, I'm wrong on this trade, wherever it is. My reports will look like this. This is the manner I write in. I'm going to give you what the market was. I'm going to give you bullet points, and often I'll write a small commentary. What this one is what I put out, just so you know, when I'm showing the PowerPoint of the day's events in the morning report. Then when the full report goes in, I'll give commentary under this, what it all means, where you're at, so on and so forth, and then a general commentary on other things I want to cover within the report. The reports are meant to be read in a 2-minute period, no more than that. Very quick. That's what I want them. The videos where all the meat is. Come on, where else can I sit there and show you the chart and talk to you about each market? I want to give it to you, and I don't want a credit card or anything. All you need to do, go to our website under free offers, move your cursor under here. It'll take you there, or call my staff. They'll get you set up in 2 minutes. I'm Ira Epstein. You have a good day. I will talk to you all tomorrow.